Hello everyone, and it seems to be relative calm after that US CPI inflation number. There was that volatility I expected on the release, the buying into and the buying after that I expected, but it wasn't as pronounced as on previous occasions. So really a very calm and muted response to the US CPI number, which is interesting because it confirmed that the Federal Reserve will be cutting interest rates by at least 25 points at its September meeting, perhaps even 50, but we can be reasonably assured of a 25-point rate cut from the Fed. Now, 1 to 2 rate cuts by the end of the year, and I think there's even a risk of a third if the US economy tanks as badly as I think it will. So it won't be good news because it'll only happen if the US economy is really in bad shape. And that's probably a slightly out there too aggressive scenario. It's probably more likely the US economy is going to continue to steadily decline and the Fed will cut rates twice by the end of the year. Those rate cuts are already part of my scenario of US stocks could be making a major high here. So that hasn't changed. We've had a big down move. We're now having a big rally. The rally isn't yet convincing that it's actually a new bull market. It does have some choppy overlapping price action, which suggests it could be, as my aggressive scenario was, that this is a correction to still a bear market. However, when we look at the price action yesterday, the market got sold down 3 times. There was a big major selling order capping the market, but it bounced back every time and closed near that level. So it was a strong close in New York. I think we could see some follow-through buying tonight, our time in Asia, in the New York Stock Exchange. But also at the same time, it wasn't that big a reaction to what was a good inflation number. And I think people should really focus on that point. Have a great day.